The housing affordability in Toronto is all-time low, and primarily is because of low level of supply of houses. We are not able to keep up with the overall demand, especially with the level of immigration we have. We welcomed about 500,000 permanent resident in the year 2022 and about 600,000 non-permanent resident in the year 2022. Even Bank of Canada's Governor Tiff Macklin recently highlighted about the supply level issues we are having. Please take a look.
We had housing affordability issues when interest rates were very low. We've now raised interest rates. We still have serious housing affordability issues. I don't think you're going to solve this problem with interest rates. The fundamental issue is, for a number of years, demand for housing has been running ahead of supply.
Second reason is the increasing of interest rate. With the multiple interest rate hike in the past year and a half, the prices of houses have come down definitely, but on the flip side, the cost of borrowing has gone up. Furthermore, due to higher cost of borrowing, not many people are able to get into the market and they're continuing to rent. And that is why the rental prices have gone up significantly high. It's even crazy to think that one bedroom condo in downtown Toronto is hovering about $2,500 to $2,600. It's totally not fair for renters. But anyhow, now let's break down the numbers and analyze what exactly is happening in Toronto real estate market. So let's determine what type of market we are exactly in, and to determine that we have to calculate months of inventory. And month of inventory is calculated by dividing active listings by number of sales. And if the month of inventory is between 1 to 3 months, then we're in a seller's market. And if the month of inventory is between 3 to 6 months, then we're in a balanced market. And if it's beyond 6 months, then we are in a buyer's market. So in the month of August 2023, the active listings we are looking at is 15,497, and the number of sales happened that month was 5,200, give and take. So the month of inventory we are setting on is 2.9 months. So this means technically we are in a sellers to balanced market, give and take, but more or less a balanced market, to be honest, in the Greater Toronto area. It depends from asset class to asset class, because the condos they are sitting, they are taking time to sell, but freehold houses, they are moving fast. So now let's zoom in towards CO1 area, which is south of Bloor Street to north of Lake Ontario to east of Lansdowne to west of Yonge Street, and check out what exactly is happening there. This area basically includes cluster of condos, so we're going to check what's happening in the condo market in CO1 area. Okay, so the active listings we're looking at is 1010, number of sales are 251, so the month of inventory we're looking at is 4 months of inventory. So things are not looking that good for condos. It's a balanced market and condos are taking some time to sell, and there are good opportunities too. I'll quickly show you one example. So here's the building at 318 Richmond Street West. It's a good building in a good location. It's in downtown core. So this is a 3-bed 2-bath listing. Was sold for 1.1 million in the month of October 2021. So 2 years ago. And exact same condo, basically identical condo, one floor above. That one sold for $999,000 in August 2023, very recently. Okay, in all fairness, the unit 3901, this was slightly staged better and was in a better condition, but still this is a $100,000 difference. So that's what I meant, that there are opportunities right now for buyers, especially in condo segment. So here's the trend line of prices of CO1 area, which is basically the core of downtown Toronto. If you do a year-over-year comparison, the prices have remained more or less flat. In the month of August 2022, the prices we're looking at is about $825,000. And in the month of August 2023, the prices have come down to $810,000. So if we do the sales year-over-year comparison, the number of sales in the month of August 2023, there were 251 number of sales, and in the month of August 2022, there were 300 sales. So sales have also declined. Now let's go ahead and do a month-over-month comparison. So here's the trend line since the beginning of this year in CO1 area, which is core of downtown. If we do a comparison between July and August, in the month of July, the benchmark prices we're looking at is $829,000. And in the month of August 2023, we're looking at $810,000. So month over month, the prices have come down. The number of sales in the month of July we're looking at is 259, and in the month of August we're looking at 251. So sales have slightly declined, and the days on market the property is sitting in the month of July were 18, and in August it has gone up to 23 days. And the active listings in the month of July we're looking at 957, and in the month of August the active listings have gone to 1010. So here's the trend line of prices in Greater Toronto area since 2019. And if you look in 2022, this is where the prices went off the charts, and Bank of Canada stepped in, introducing multiple interest rate hikes. And after that, we can notice there is a downward pressure on prices. So in the beginning of 2023, we can notice on March 8th and on April 12th, this is where the Bank of Canada did not increase the rate of interest. And this is the trend line of March, and this is the trend line of April. This is where the Bank of Canada held the interest rates, and we can see an upward pressure. It's a basically direct correlation between rate of interest and real estate. So the prices started to go up over here, and again in the month of June and July, the Bank of Canada did increase the rate of interest. To be specific, June 7th was the date. This is where they increased the interest rate by 25 basis points, and the second date was July 12th. This is where again they increased the interest rate by 25 basis points. So this is the month of June trend line, and this is the month of July where they increase the rate of interest, and we can notice a downward pressure going forward in the month of July as well as August. So in September, the Bank of Canada did not increase the rate of interest. So I think so in going forward, in my opinion, the prices are going to hover along around this price point. We won't see a drastic upward or downward pressure on prices for rest of the fall, I think so. All right, so that was a quick market update. I hope I was able to give you some valuable information. And if I did, then please subscribe to this channel, because this really helps and motivates me to make more videos like this around real estate. If you have any questions about real estate, then please feel free to book a call with me as per your convenient time by clicking on the first link mentioned in the description below. Thanks for watching, and see you in the next video.